Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 21st of June. All right. Now, just having a look at what's going on. The dollar finds footing on housing data, right? The building permits numbers came out better than expected in the US and just gave the dollar a little bit of a boost. But we're talking like marginal, right? When you look at the instruments, if I come across to the main global markets, you see the dollar index just coming back a touch here. Nothing much in it. Like euro has hardly moved. If anything, gold, there's pressure on gold, right? There's a lot of the risk factors in the markets, global markets have sort of come out of the market. I'm starting to think that a move down towards 1900 is on the cards. We got a bit of range bound trading here on oil, bounced again off that sort of 69.5. Equity markets, well, they're having a bit of a pause, right? Now, even if the Fed don't raise rates, these things don't go up in a straight line. So this is normal price action where the price actually comes back towards the support trend line. And that's where you get the test. It either continues to rally or we get a bit of a falter through that. So and that's where the data comes into play. The big shaker and mover has been Bitcoin. It's gone from 26,800 up to 28.5. It's got to be one of the influencers or something there. I haven't had a good look around to sort of chase that up. But just having a look at the currencies, right? And this is where you'll see that little bit of a dollar, just a little bit of a reprieve there on the dollar, right? So euro coming back to test the support trend line, probably just going to drift through that as we come into the Bank of England today, right? So sterling and sterling crosses are very much in the firing line. With that move down in the Aussie, we had the RBA minutes yesterday. For those patient enough to have a look, and I said, you know what, I sometimes don't look at the minutes because, you know, usually everything's in the statement, but these ones were different because they were sort of saying how much of a line ball decision it was around raising interest rates last week on the Aussie. And what the market did after that was factor in a couple of extra rate hikes. So they've got it completely wrong. And the Aussie has had a big turnaround there, dragged the sterling down through that support line. And its little cousin there, the Kiwi, just going with it. So what does that do for us? Well, it really revitalizes sterling, right? Now it's broken down through that trend line, really gives it open room to sort of move today on the UK CPI numbers, right? Today's CPI, and we get the retail price index and a bunch of other numbers, and then the Bank of England Thursday, right? So these inflation numbers will go a huge way towards working out what's going to happen from here on sterling. So I'll just come back to the data page here. And actually, let me just come over to trading economics and New Squawk. It's a bit easier to see. So just coming back through the data, you can sort of see, and this is why I like the market conditions at the moment, because the market is behaving very normally, right? The US building permits, 1.49 was the actual number versus 1.42. Okay, so yeah, better than expected. Gives the underlying market a little bit of a boost, and the housing starts numbers there, a little bit of a injection there, up 21.7% versus the previous minus 2.9. Okay, so overall, the housing market, yeah, a little bit of a rebound in the US, gives the dollar something to look forward to. Now, let's have a look where the action really is, and it is the UK inflation numbers. Okay, you got PPI, you got the retail price index in there as well. There's a whole bunch of things right now. The key to it is the inflation numbers. Okay, these are the peripheral numbers. I know, like, you can produce a price index, obviously an inflation number, and then you got the retail price index, which is, it's like a consumable CPI or core inflation rate. So I was going to say something else, but so the retail price index, it is more sort of like white goods and a few other things that people buy. They can see what the inflation is there. Now, what are we really looking for? Okay, if I come over here to New Squawk just to dig into the actual numbers, the UK CPI, right, the core food and fuel, etc., like that is a number we're looking at. Yeah, sure, but it's this number here, the UK CPI, the month-on-month and the year-on-year numbers is what the central bank has been looking at, and this is where they're under pressure, right? Previous number 8.7, the range here pretty tight, right? To me, this opens us up to a potential well, move either side, to be honest, because if it's outside that range, then we are going to get something going on. I was just having a look at, so the low 8.5, the high 8.4. Someone's got a little bit crazy with their keyboard there at News Squawk, but it's a tight range. If it's below 8.4, well, you know what? It's below the low here, and we could see a decent move to the downside. Like sterling, I mean, inflation in the UK has been sort of bubbling away. Excuse me. So if we get a surprise weak number, it's going to take the pressure off the Bank of England on tomorrow, Thursday, and that's should see sterling roll back. A number definitely above 8.5, I'd say back up towards 8.7 and above. Then we do see sterling spike to the top side, and we get the Bank of England back in the firing line. And it's not about like 0.25% has already been factored in, right, for Thursday's rate hike in the UK. But a really strong number, they're going to have to come out with some very aggressive statements. So it's all about the statement. So this number here today is going to give us a big idea of what to expect from the Bank of England. And as I said, when you are looking at sterling here on your charts, okay, like it has just sort of just drifted through a trend line here, which does open it up to a bit more of an aggressive move, a bit more volatility around the trading opportunity, okay? And what we can expect, let me just get off that page if I can. I was just having a look around, right? And I've just found some good option volatility stuff, risk reversals, right? Which sort of tells you when you can expect like implied volatility. Okay, it is spiking, which tells me that they are expecting volatility, obviously, with this number, right? So you're going to be like it's up at 9.8%. Okay, so just keep an eye on that, because the 1 week, okay, implied volatility, it's like the VIX, right? This tells us that the market is expecting a potential big move here. So that lines it up. So, and if you see that, right, then you can actually start to probably manage your capital a little bit better, right? If they're expecting greater volatility out of these numbers, which you would for most CPI numbers, then just decrease your trade size and manage your cash better. The risk reversals, okay, just having a look at those. Engaging calls to puts, okay, a little bit of a drift off here as well. So people are buying some puts over calls, and that tells us, you know what, the market is very concerned about a downside move. So increased volatility and the risk reversals sort of just drifting lower tells me that, you know what, the market is really anticipating the potential for a move down in sterling, right? So I'll be talking more about the risk reversals and implied volatility as we go forward. I mean, I just managed to sort of dig these up on Metastock. So they are something we can use. They don't necessarily tell us exactly where the direction is, but they do tell us where volatility is and what to expect. So now just on a finishing note here, this UK CPI number. Now, don't forget, if you are trading and this is variant, well, you will get an initial move in the instruments. Then just come back once you've seen the initial move, just browse your eye over the PPI data and any retail price index numbers. They should generally all line up with the inflation numbers. But if there's some sort of anomaly or any sort of revisions, make sure you are paying attention, because you may need to manage the position if you do get something rocking and rolling, right? So today, for me, it's all about sterling. There's nothing really happening here on the US equity futures. No direction, and there's no direction here on the majors. Commodities, well, there's a little bit of activity. Copper, the Baltic Exchange, like crude, all sort of rallying, but not much. Everything's on hold, right? And this is good because the US dollar has taken a bit of a background sort of a back seat, and that gives the other currencies here a real good chance to come into play. All right. Now, I've just been updating my global financial markets page, and just to make it easier so I can fit more data in. And you can see here the safe havens here as well, yen and Swiss. Okay, not much joy in the safe havens just at the moment. They are down across the board, and you've got Kiwi, Aussie, sterling against some pairs sort of drifting up. Same with euro, right? So it's going to be a bit easier to sort of track exactly what's going on across the markets. As I said, the US equity futures not really doing a lot. Asian equities up a little bit, and you'll wait to, that's European equities. The Asian equities sort of up and down here and there. And I've included on the majors here a bunch of sort of peripheral dollar pairs: China, renminbi, Norwegian krona, Swedish krona, and the South African rand, right? Probably worth having a look at these dollar pairs as we go forward. Treasuries, well, not much of a change there at the moment. You probably need something to happen big on the US dollar to get those moving. Anyway, so there where we are, guys. The market is in a bit of a holding pattern. Now, depending on where you are, just don't forget this heat map, right? You'll start to be able to see. I'll refer to this a bit more as we go forward as well. So depending on where you are based, you can work out what pairs are generally more active in the time zone you're in. So, like, there's no point sitting there and trading instruments that don't have any interest at that point, right? But once you come into the London session, okay, sort of 6, 7, 8, 9, obviously the euro pair is going to be big time in play. All right, guys, that's it from me. UK CPI on the cards. It's a big rock and roll number. Just be careful trading the release. It's going to be volatile, especially with where sterling is sitting just at the moment. It's going to create opportunities, but with those opportunities, maybe a little bit of extra risk. So make sure you control your capital management around those opportunities. All right, guys, all the best. Cheerio.